In this video, we're going to go through and we're going to analyze some casino stocks. Now, I had a student specifically request that we talk about the casino stocks simply because this November, the Formula A1 Heineken Silver Las Vegas Grand Prix is going to be held in Las Vegas. And it says the Formula One is coming to Las Vegas November 16th through the 18th. And he was wondering how this would affect the casino stocks. And he wanted to go through and analyze the casino stocks and see if there wasn't any opportunities there. I thought just for fun we'd come in here and look and see what some of the casinos cost to stay that weekend of the races. So here's Las Vegas, Nevada. You can see I put into hotels.com. And the dates are Wednesday, November 15th through Sunday, November the 19th. So this is through that time frame of the race. And then 2 travelers, 1 room. So if we come down, we can see MGM Grand here, $843 a night or $4,000 to stay there that 1 week. And that what is that, 4 days, 5 days. And then if we come in here, the Stratosphere, usually you can stay at the Stratosphere for around $50, $60 a night. It's $364 a night. Let's slide down Hilton Grand. Here's the California, the Caesars Palace. Look at this. Caesars Palace is $2,500 a night. It would be $11,500 for a normal room here in Caesars Palace during that weekend. We slide down, look at this Motel 6. You want to stay at Motel 6? It's $400 a night. Trump, we can usually stay with Trump $120 a night, $99 a night. He's $949 a night. Downtown Grand here. I want to slide down and show you one interesting, the one that I found down here, the D. Usually you can stay at the D for $29, $39 a night. That's $457 a night. What's another one? There's the Venetian, $1,232 a night. Now the Plaza, you can usually stay at the Plaza for $19 a night, all right? The Plaza, $19 a night, $29 a night, $39 a night, $335 a night. But you can still stay. I mean, if you want to go there, it's still $335. That's still a bargain compared to some of the others. Let's slide down here a little bit further. I want to show you a couple of others. Here's the Golden Nugget, one of my favorites. I like the Golden Nugget. It's around $100, $129 to stay there a night in Vegas. It's $349, which, you know what? That's a bargain for the Golden Nugget. As we come down here, let's look at another one, the Bellagio. We all love the Bellagio, right? We've been to the Bellagio on numerous occasions and can usually stay at the Bellagio for $200-300 a night, $1,800 a night, 4 queens. And, you know, that's just kind of a quick rundown of some of these casinos and what we're going to be paying to stay during the Grand Prix race. So let's go through and quickly take a look at some of the casino stocks. Now, I'm not going to go through all of these. I've just got 10 of them listed here. We got Bally's, we've got Boyd Gaming, we got Caesars, we got Gaming and Leisure, we've got Las Vegas Sands, we've got MGM, we got Melco, Penn, Red Rock Resorts, and Wynn. So those are the symbols that you can go through, and you can put those into your software, and you can follow along with me through this video. We're going to look about 3 of these, maybe 4, but I want to just kind of give those to you, let you look at them on your own. But I want to bring the first one to your attention, being the Boyd Gaming. Now, the reason I say Boyd Gaming is because I want to show you a wonderful stock. All right, I want to show you a stock, what it looks like. This is the kind of stocks we want to be trading. So if a stock looks like, let's say Bally's, for example, we're not interested in trading this stock. Why? Because it's not exciting. It's got no trends. It's, you know, there's some opportunities here if you want to sell some options against some and collect some premium. You know, there's those types of opportunities. But if we're looking for entry positions and ride the trend, then Boyd is the kind of market that we're looking for. Now, the problem is it's already taken off and run without us, right? We're a little bit late to this one. And if we start jumping in right now, we feel like we're chasing the market. Let's draw a couple of trend lines and just kind of identify where we'd be looking to get into this market if we were getting in, and learn a little lesson from this. Now you can see that this is in a beautiful uptrend, and obviously the places where we want to be getting into this market are down here, right? Buy low, sell high. We don't want to be buying high, sell low, unless you're going to take a short position, right? You don't want to buy up here and then sell down here. You want to be selling up here and buying down here. So whether you want to sell first and take a short position and buy down here, or buy first and take a long position, you can do that. But as the market moves through this wave pattern, you can see that this is the type of stock that we like to accumulate positions in. And so these red zones are the accumulation zones, is what we call those. And you can see that down here on the accumulation distribution model. As the green line and the red line move through price and time, you can see the accumulation zones right in here. And you can see how those match up with the accumulation zones of the bulls and bears. The bulls and bears, of course, coming down into the red zone, bouncing off these areas of support. These are accumulation zones. These are where large speculators, traders, and banks start accumulating positions. And then as the market starts to rally, we retail traders start to buy into the market, and this is where the banks start to sell. Because if we're buying, somebody has to sell it to us, and it's the big banks and the large hedge funds who have packed up on a whole bunch of shares and bought all down through here, through what they call the accumulation stage, right? So they're accumulating, and then when we as the retail traders start to buy, they start to sell. They sell out their positions, and that's how they make money. So if we want to reverse our thinking and say, hey, I want to do what the banks do, we want to be buying and accumulating shares down here in these red zones so that when the market starts to rally, we can start to liquidate and take some of our positions, or we can ride this thing up until we get a sell signal and take our positions out of the top. Now, they're big, they're huge organizations, so they can't just suddenly get to the top and say, oh, well, I'm breaking lower, I'm going to hit an X1 or an X2 or an X3 from the Elliott wave pattern and just dump all their shares like we can do. That as a small speculator. They have to sell out along the entire trend all the way up, because if they just suddenly dumped everything, it would dump the market, and that's not what they want, right? They want to slowly sell out their shares to us as we buy. And so that's the Wyckoff accumulation distribution model that we like to trade, and that's what the bulls and bears is all based around, is to help us identify those accumulation zones for long-term investing. And so that's what this is looking at here with Boyd. This is a beautiful market. Very nice trade. We're reaching up into this upper region right now. Not excited to jump in long on this market because it's not in the red zone. It's not in the accumulation zone. And generally when we get three of these, right, three drives, we generally look for a retracement and a pullback. So I'm not really anxious to get in right now, but I am watching this stock because there is the possibility that this thing would be a nice buy when it starts to pull back a little bit. Now I have the weekly chart in here, and the weekly chart, as you can see, is coming along. We had a big, long, beautiful drive up right here, and then the market's just been going sideways. Now again, remember, this is a weekly chart, and so what we're seeing on the daily chart is just this last little piece right back in here, those three drive patterns. So on the weekly chart, you can see that it looks small. It looks like it's land. It just looks like it's part of the overall long-term sideways trend. I'm not interested in this market. Well, we got to come down and look at the trees from the forest and see that this is what that last little drive looked like. And for us, that's a nice move. If we just go from the bottom to the top there, you can see that on 100 shares, that'd have been a little over $1,000 per move on that market. So that would have been a nice move for us had we been in there on this Elliott wave 3-drive pattern. Let's come down and look at Caesars. Caesars is the other one that I'm kind of looking at, seeing, hey, there's maybe some opportunities here. If we look at the weekly chart, you can see that Caesars went up through a nice 3-drive pattern, up the Elliott wave pattern on the long term, reversed and came down, gave us the ABC pattern, just like a train on rails, right, as we come down and we give us this ABC pattern down to the 100% level. And now what are we doing now? Here on the weekly chart, we're going through the accumulation stage again, right? So this is the accumulation stage, and what are we anticipating after this? Well, we're going to anticipate that the market is going to start to rally once again and start a new 3-drive pattern up. So this is what we're going to be looking for on Caesars, and so this is one of the trade recommendations, one of the casinos that I would recommend. I'm not really oftentimes into the casino markets, but if we're going to buy some casinos, this would be a great one to start accumulating some shares in, starting to look for this market to start to rally. Now be mindful, Wyckoff says, be careful. They always, not always, but sometimes they like to drop that market down, see how many suckers they can get in there. So that's called the spring, right? The Wyckoff spring down in there. So watch for a spring. Might happen, might not. And it doesn't always happen, but sometimes they'll drive it down just so they can buy out all of your shares at a cheaper price as you sell out, scared this market's going to go down further, so that they can have some cheaper shares for the next rally up. All right, the next stock that I want to look at is Las Vegas Sands. So if we come down and look at the Sands, this is the daily chart of the Sands, and you can see that it's come down into the accumulation zone and then broke and started to rally once again. We had a nice 3-drive pattern here. 1, this is 2, and then this ugly little thing right up in here, it was the 3rd drive, kind of failed on us, didn't it? Come back down, went into an accumulation stage, and then it started to go once again. So this is getting up into the 3rd drive. So where do we expect this thing to go? Let's look on the weekly chart. You can see we're reaching up into some high zones, up into some resistance areas. And so we've had a nice 3-drive pattern. I would like to see this market fall back down and give us another opportunity. I would imagine we'll get some sort of a distribution zone up in here, very similar to what we saw right in here. See this little distribution zone up in here? We'll probably get something again like that right in this area here. I would like to see a little bit of a pullback, an opportunity to see this market come down give a pullback against this market so we can get into another red zone, into another accumulation zone before we start to see another rally once again. So on the daily chart, if we take a look at that, I want to see this market kind of come off this overall longer term drive 1, drive 2, drive 3 pattern, give us a little ABC, go back into an accumulation area. So right now for me, there's no buy on this one, but I want to bring it to your attention because that's how we prepare ourselves, right? The next one I want to talk about is MGM. And so MGM, another popular brand, I've just kind of hitting the highlights of the best markets in here. So as you can see, this is the weekly chart of the MGM, and it's coming up doing the same thing. We got this nice kind of rally that's been coming in over the last year, and so we're up into the drive 1, drive 2, and we're getting kind of toppy up in here. This is kind of the third drive on this Elliott wave pattern. So you can see we got the other break right in here. So we got drive 1, drive 2, we got the break, and we're going to anticipate a drive 3. But how high will that go? Not thinking it's going to get all crazy on us, but I would like to see it go up, kind of test this little high right up in here, and then give us one of those, again, same basic pattern that we see right here. I want to see kind of this little accumulation zone. I want to see that occur right over here. I would like to see it pop out the bottom, give us a little bit of an opportunity to get some red bars, and then look for the rally once again. So if we come back over to MGM, that's kind of what I'm looking for here. You can see the accumulation stages in here. Here's one where we could have started to buy some shares. Here's another one we could have started to buy some shares. Again, you can see that down here in the accumulation model. And you can see right there, more accumulation. Here's some more accumulation down here. This one would have been difficult to start anticipating down here. Once the market started to rally, this would have been a better one. And then, of course, this one here. And now we're looking for the next one. See if we can't get another accumulation zone. And that's what we're looking at here on MGM. And I just want to look at one more. We're going to come down here and look at the win. We're going to come to win, and this is the daily chart on win. Again, you can see basically this looks almost like a 4-drive pattern, but we're going to call this drive 1, drive 2, and then we're up in here into drive 3, and we're topping out. So now we're into the Wyckoff distribution stage up in here, as you can see, and it may be a reaccumulation stage where we break out and do another run, but if it does, then we may miss that one. We don't want to feel like we're chasing a market. So I would rather see this thing come in, fake out to the upside, give ourselves a spring to the upside, and maybe drop back down. Of course, if we run the Fibonacci ruler across the entire market right in here, you'd see that we expect this market to come back down into this region here and give us some opportunities to start reaccumulating this market, this win market, going back into the long position going into the end of the year. So if we look at a weekly chart, you can see that this market again is quite up here, quite high on this rally. We got this nice big drive up in here, and it looks like to me, if we come in with the Fibonacci ruler, we should be seeing this thing pop back down just a little bit, maybe back down into this region, 38-50% region, before it turns and starts to rally once again. Now that would be a longer term move. We might get some different different view down here. Not quite that far back, but this is what we'd be looking for to get some accumulation opportunities here on win. And that's just a quick rundown on some of the casino stocks. If you have any specific stocks that you would like me to take a look at, send me an email, lhturner@trademenders.com. I'd be happy to pull up and look at some charts with you there as well.